Hello guys, so quickly on the live examples based on the previous video on market structure. So like immediately, like what I told you guys regarding exchange points, exchange point. So you can see that uh, this was the leg. We had a leg here. This was the why is this thing looking? So this was the higher high. Are you getting me? This was the lower high. You can see how impulsive market broke this higher high. Are you getting me? So now you can see that price failed because normally we would mark here as our demand zone first of all. I'm not even refining it, just men looking at it, you can see that there's something there, wherever. But you can see price fit to the where did price come to? Price came to the exchange point. Are you seeing it? Price came to the exchange point. So that was the last point of demand. That was the last point of demand before price that was or rather the last point of demand that price broke with a very impossible leaving many imbalance. So that would be a that's a high probability POI. So that would be your first point of interest. But if price breaks, the price must we have other price action downwards that price will react to. So that's for that. So quickly, this is Euro USD. Let's go to the 15 minutes time frame. So quickly, so we know from the 1 hour time frame we are bullish. I'm sorry for the too much lines on my chart. I've been sending some screenshots to some persons during the day. So when you send a screenshot, you have to put some details on it so that at least who looks at it will be able to understand what's there. So you can see Euro USD have been bullish. They have been bullish. So right here, this was the point of interest. If you mark your internal structure, what will you mark? So this is a lower high, lower low. What am I saying, sef? Lower, sorry, lower high, lower low, whatever. Any name you want to call it to, any name, so long you understand the concept. Lower something there. This is lower high again. Then we saw another break of structure. Saw another break of structure, which means this is our new leg. So you can see this leg held the price. I think price even broke itself. So because of price broke, oh, I, I, so you can see price wicked. Price wicked this high. It wicked this high. So it means that this this is a recent leg. I'm supposed to be using different colors soon. Um okay. So this is the new leg. This is the new leg. So then this is our new higher high. That'll be our new higher high. Are you getting me? So that'll be the new higher high. So now, so you can see that price did what? Price came. So now this is the new higher high. You can see even this break of structure over here was fake. Are you seeing it? It was fake. You can see the break of structure. Some people will call it break of structure. You will see smart money traders. Money traders, they will come here, take a sell. They will take a sell, or they will, because they know that, because they told them that every other block is a sell entry. Because why won't they take a sell? You can see a sweep of liquidity here, a break of structure. Are you seeing it? So they will take a sell, and you can see how price disappoint every time. So because of the knowledge of price of market structure, we know that this is a real leg. then this is the real leg. So we know that anything here can be a smart money trap. So you can you can it's not like you cannot monitor like this. Now this is clearly, you can see the time 1945. This is clearly midnight, so you should not be on the chart here. Then this is I think this is the next day. Then this is another midnight again, where let's not go into that. But you can see that after this, the leg, you can see that price came wicked. Then what the price do? Price came to the higher high to do what? To create another higher high. You can see it. To create another higher high. Um. So what the price now do here now? Price came down. So if this was the recent high, and something have broken it, what does it mean? It means that this is our new leg. Are you getting me? Then this is our new um our new supply. So like this gave a good entry, because you can see liquidation, break of structure right here gave a nice entry. So where will you take your profit? Because you cannot take your profit over here. Why? Because you are following market structure. This is not the new leg. This was the previous high. This is not the new leg. So it means that this demand over here is very strong. So the highest thing you can do, the the best thing you can do for yourself is to look for an unmitigated zone over here. Then take your profit over here. I getting me? So once you take a trade, you take a profit over here. So now that price broke this demand. Now that what am I doing? Now that price broke this demand. So now your our perspective now has changed again. Has changed again. Why? Because now what do we see now? We now have a new lower low. But you can see that price is still respecting our exchange point, our exchange zone. So right here now, what do you now expect? So this period was, you can see 22, 23 to 26. So these were all Christmas period, and you know that the market during season, like, people withdraw their money from the banks for the celebration. So it causes price to do rubbish. That's just what I would say. So in this place, nobody will advise you to trade anything, but at least for the sake of what we are learning, you can see after the break of structure, this is now our new high, this is now our new low. So the same concept, what do you do? Look for our points of interest, the ones that cause, because you can see there is a range. This small candle, it was after this range that you saw this big impulsive move that broke structure. So that's important. Then also up here, you can see we have other supply zones over there too. You can see we have other zones there too. So the same stuff. But right now you can see price reacted to these zones. Price reacted to these zones. Then what the price now do? What's the time? Then after the break of then price broke our main high, our main market structure. So this is what we call a break of structure. This is what we call a break of structure. Are you getting me? So that's what we call a break of structure. So now this is where I actually wanted to discuss about in the video. So now after the break of structure, what do we? The same stuff. You look for the demand that cause liquidity. So you can see um all over here they were all liquidity. You can also see this concept as the just look for the extreme. Some cause liquidity, then it broke structure above. But another a confluence too, you can see this range. You can see that it is unmitigated. This range, it is unmitigated. The same concept with the exchange point. You can put your this. You can see that it has not been tested. Are you getting me? The exchange point, it cannot be tested. So that's a point of interest in the future. Then the other point of interest is the range that costs the break of structure. So now from the higher time frame, I will not go there now. This is the whole range that cause is a kind of doji candle. You can see it that cause the break of structure. So I refined it into another two POI again. You can see this first one. You can see it was after this range price started going up, cost break or structure. Then another POI, there was nothing clear yet, so I just marked the whole zone. Even when I went to the 1 minute time frame, I not see anything clear. Like I told you guys, during this festive period, price does rubbish. So you can see after the break of structure, after the break of structure, price came back to test this supply zone. So now this is when you need good understanding of market structure. You need good understanding of market structure. So um now, despite the fact that despite the fact that this was a break of structure over here, and we expect price that after price comes here, price will create another higher high. Despite that fight, that's as I said, we need to pay attention to little details in the market, because the market is trying to tell us something. We can see a clear order flow, we can see a liquidation, then we can see a break of structure over here, even in the lower time frame. So these are just internal structures. Are you getting me? So the higher time frame is telling us bullishness, but now the lower time frame structure is giving us signs of bearishness. You have to take take give attention to those. So now we know after the break of structure, what do we find? We find, so this candle will be our highest control supply. Then this zone right here is in the lower time frame, was the one that caused the liquidity, the break of structure. But before we go to the lower time frame, we can see that when price came to react to this point of interest, you can see price gave us a bullish, because remember that we are bullish from the higher time frame. Price gave us a bull. You can see a bullish intent, so giving us signs of bullishness. Are you getting me? So I know after this video, many people will have a lot of questions to answer me. So first of all, so after that, this bullish break of structure, minor break of structure rather, what do we now do? The same thing. This is, you can clearly see it there. It is a range that caused the break of structure. Then down here would be the one that caused liquidity. That would be the second point of interest. Then now, price failed to give us a direct entry at this zone. Price just came here over here. Are you getting me? So this is when you start being so flexible, taking intraday trades, even though we are not really I won't say we are intraday traders, or I won't say we are scalpers or whatever. We are just reactive to the market. Let's go to the lower time frame. Where is it? Time. So um so you can see price reacted to this price reacted to this zone over here. So whereas I won't go deep into entries right now. I won't go. We're just talking about market structure. Can see price took out liquidity, broke order flow. The same concept. Take your entry from from the supply of, so the same concept. So now you remember that we are bullish from the higher time frame, and this is our confirm a little confirmation of the bullishness. So now this sell trade, now where will you take your profit? It's here. Either you take your profit at the middle, or you just put it here, 1 to 14 or 1 to 15. Are you getting me? Then once you take your profit there, you wait for, because you know that we are bullish, wait um for bullish signs. But now you can see that this is we are having bearish price action here. Lower low, lower high, lower low. What am I even saying, sir? Lower low right here. So now this is another lower high. Are you getting me? So it means that on the minor scale, this is what is holding structure. Are you getting me? And now it broke structure over here. It broke structure over here. Let me delete this thing. It broke structure over there, then gave us this high again, then broke structure here. Now you have to be very, very flexible with this. Very, very flexible with this. It broke structure. So now this is where we start looking for our buy trades based on the higher time frame bias. But now price came to create another lower low. But now another stuff now, based on display, based on the higher time frame bias, this break of structure over here would be another confirmation, or rather another, how do I put it, another sign to give us intent of where the market is going to. So now we are looking at the market based on the selling perspective, and also the bullish and bearish perspective. So now we are in as sellers, and also we're also keeping in mind our overall perspective. So now any sell we take right now, they are all what, counter trends or edging or edge trades, but the buys are what we are really looking for. So until the buy comes, are you getting me? We are looking for the sells too, until the buy comes. Are you getting me? So now, based on the selling perspective, this is the order flow: lower high, lower high, lower high. So you look for another trade here. Are you getting me? Then based on the buy, when price hit our important POI, break of structure, look for this is our next POI, the control supply, the one that broke structure. So now this break of structure now is another intent, showing us bias intent too. So now it means that um yeah, it's also based on the bias. That place is another important zone for us too. Are you getting me? So I think I should go to the 5 minutes so that it will be more clear. Okay. Yeah, I think it's better here. 5 minutes. 5 minutes. It's better here. So now you can take a trade here. You can take a trade here. But for me, what I would do now is that I know that this is where the buy has to come from. It's where the buy it has to come from. So now what I will do is that any trade I take here, I will just leave it, so that in case any buy trade I enter here fails, it will just continue going down, because I I am happy to lose a trade here because of I have sales open here, so running down Are you getting me? So maybe this sells here because I know that we have another important zone here too. I can just take some partials or just get out of the trade. Why? Because if the price come here, it means that we are maintaining what? We are maintaining bearishness. So price will come, make another lower low. They continue going up. Let me put that in red. Um, so I see. So it means we are maintaining. So this will be our new lower high. We are maintaining bullishness. So that's just it. But in this case, the buy came, took a buy. So now we know that we have already mitigated. We have already mitigated the supply here, and from the higher time frame. Why is this? Oh my God. Sorry. And from the higher time frame, we know that this is our target. Let me. We know that is our target. 15 minutes. So you remember from the higher time frame, we are bullish. This is the higher high. This is the break of structure. Price comes to test our zone, our range that caused the break of structure. So now, if we take a trade from here, what we should be targeting? We should be targeting the high. So when you take a trade from when we took the buy when took the buy from here, here will be our target. I seen it. That will be the target. Then what's the time? Man, this video is long. That will be the target. So I think that will be all. I don't want to make the video too long. I think that will be all for today. So in case you have um questions to ask, you can also ask me. Another okay, let me just finish with this. We can see that even after price broke the structure, eh, normally this should be our new leg. Are you getting me? But what the price broke the leg and still came again to break structure. Why did it happen? It happened because of there are still resting orders over here. But how should we approach this? Are you getting me? So when price broke the structure, when price broke the structure, when you are backtesting, you have to be very, very realistic. So what you do now is when price broke this structure, we can call this place a sweep of liquidity. We can call this place a sweep of liquidity because you can see that price wicked it. You can see I even mark the zone. You can call that place a sweep of liquidity. There was a zone I marked here too. That was where I took profits. That was where I took profits. There was one I marked there. That was why I took profit. So I know that there is surely demand over here. So after it wicked, price now gave us what? Another bullish intent. You see the break of structure? Give us another bullish intent. Also gave us a kind of trend line over here. Give us a kind of trend line over here. Let me delete that trend aside. It will not be too messy. So when it gave us a bullish intent, like I said, in this case, I don't expect price to come to this high at all because price gave us broke this our real supply, our real market structure. So market structure and supply and demand, you can they can be the same, but in reality they are not really the same because you can see that um, even though market structure is telling you you are bullish, yet supply because of supply and demand, supply broke demand, broke this structure, then still evaluated. So it's like it's breaking the rules of structure. So that's why you have to understand both and know how to synchronize them. Are you getting me? So now in this case, I don't expect price to come to break over because right now supply is stronger than demand. But now price has given us a minor sign of bullishness, because normally we know that price should come here, because normally after this break of structure, we expect price to come to the supply that broke demand, and also the extreme also, to give us a lower low. Are you getting me? That's what we expect, to give us a lower low. So now we want to trade even though we are looking for sales over here, we want to trade the market up there. Are you getting me? So every trade here, there will be counter trend or intraday, wherever you want to call it. So are you getting me? So now after this minor break of structure over here, you can see um you can mark your demand again. So the rules of, I won't be making too much reference of those supply and demand, how to mark it. You have to go back to the other video to watch it, so you can mark your demand there. So this was here where I took a buy. So where will be my realistic take profit? It will be the supply zone over here. Why? Because based on market structure, I expect price to um to do this, to create a lower low. Are you getting me? That's being realistic. So that's what you take your price to, you take your take profit. Then another thing now, um after price came to this supply, you look for a sell here. But after you look for a sell here, you cannot just, because surely you will see that there are possibility of price breaking this. But how will it do it? You don't know. So that's why you have to be to be reactive. So now after this break of structure over here, we have a range over here. That's this red box. We have a whole range here. That this range was what caused the BOS, and it has been holding price. Um you can see it hold price here. It also came and hold price. So you can take an entry here. You know that you will be in sell over here, so you can look for a buy. If price gives you a buy entry, you can look for it. So that now you'll be in sell and buy. So market will choose its direction. It's not your concern again. So market has to choose the direction. So you can see. So what will be your take profit? Your take profit will be this high. For your sell over here, your take profits will be down here. Your take profit will be down there. But for this buy here, your take profit will be here. So now after this break of structure, so now price has given us another confirmation again of the continuation of the bullish leg. I getting me? So now after that break of structure, you look for you go um, to your higher time frame to check for the zones, for your ranges. Are you getting me? So you can, so that you can find where. So now you can see this doji candle. Can see this doji candle. After this doji candle, we started seeing impulsive moves that broke this high. So that was why I marked this high. So now over here you can look for your trade, look for your buy. Then where will be your target? Your target will be the next high. Are you getting me? So that's just, I just keep on following market structure. And so that will be all for this video. So in case you have any question, you can always reach me for clarity. Thank you.